Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Thursday, the 20th of November. I'm starting off with African Consolidated, where there's been a second sharp rebound off this broadening triangle, which has been in place on the daily chart since March. Obviously, the first time we had a failure last month at the 200-day moving average, currently at 1.17 pence. Decent end-of-day close yesterday, Wednesday, for the shares above that feature, and the message is that while we stay above the 200-day line, there should be reasonable follow through towards the 2014 resistance line at 1.8 pence. In terms of the stop loss, it is rather difficult, possibly around the 1 pence area, which was the initial October resistance. That was also support in March, but obviously that is a big stop loss percentage wise. But of course, in this sort of area, you are dealing with high volatility and difficult risk management. Next up is Hurricane Energy, where the shares have been slapped quite sharply since the summer. The idea here is that there would be some recovery, especially if we can get back above this former floor from April around the 20 3/4 level. So we're sort of flirting with that as resistance at the moment. Probably the best way forward here really is to sort of stand aside unless or until there's a decent end of day close back above the 20-day moving average. That's currently at 21.92 pence, and that would be the buy trigger for a partial or possibly even full recovery back to the best levels of the year, which were seen before the summer. Going on to another situation which is very much in focus at the moment, that's Mwana, Africa. Here we've got sort of classic rising trend channel over the past, much of the year really, since March. Situation is that we've had this dip since last month below the rising 200-day moving average at 2.17 pence. That looks to be a decent end of day close stop loss now that we've closed back above that with quite a decent amount of momentum. In terms of the upside, above the 200-day line, looking towards a retest of September resistance, currently towards 3.5 pence. Any dips towards the 200-day line initially for Thursday would be regarded as a buying opportunity. Finally, we have TXO, which looks quite explosive on the daily chart. The reason for saying that is that we had the unfilled gap to the upside in April, and really the show of strength by the shares has been the way that we haven't actually gone back to fill that feature, and with the end of day close back above the 200-day moving average this week, it looks as though the bulls may be back on track. Stop loss on the buy argument at the moment, probably the I suppose the floor of this year's price channel at 0.12 pence, and looking towards a top of range and top of channel target at 0.4 pence. That's it from me. More updates at spreadbetmagazine.com.